What's up, everybody? Drew, aka Catching Rockets here. I hope y'all had a good day today. Sorry I have not been live in a tiny bit over a week. Life has been lifing. With that said, we need to chart April's levels. We need to chart weekly levels. We have a lot to chart. Excuse me. I'm going to delete this stuff down here at the bottom. Might become relevant when we get down here, but this is far enough back that I don't think we need all of this on our chart. All right. That's up, Triple G. Missed you too, brother. Stuff coming. I think changes. I don't know that I'm at liberty to talk about stuff, but I know or I guess I'll talk about my stuff. Keenan reached out and asked about doing like a weekly class, and I said yes. So that should be happening. Also asked for a specific day for live trading. And for consistency every week. So that should be happening as well. All right, there's our April levels. We need to do our previous week levels. Oh, do I have session volume profile turned on? Cute. Today we're going to get levels for tomorrow. I'm also going to do a tiny bit of education. Nothing crazy, but stuff that might be helpful to people that don't know it. Pretty interesting to notice that our previous week value area high is also the developing POC for the current week. If we come here, definitely expect to bounce, at least for now. I noticed something interesting on the current chart that just creates a good opportunity for teaching. At least I think it does. Okay. And then pour low. And here we have, this is not a spike, right? It's a pour high, yeah. Okay. I did a little bit of talking today in Keenan's calls and puts. I'll just show this. So here we had single prints at this level here. And somebody was asking, are we going to go to 725? And it was when we were right about here somewhere when they asked that. And I was saying, based on this the single prints here, ideally you would want to close longs or calls right here. And then pretty much right as I said that, we had the sell-off to what would have been probably the developing value area high, obviously bounced. We did hit 725, but the theta and the difference in price from here to here is not much, and the theta probably wasn't worth staying in for 725. So always be aware of your single prints whenever you're looking at charts, especially this was not just single prints, but it was all-time highs, right? So definitely something worth keeping in mind. We had a big sell-off right at the end of the day, but then they bought it right back up. We're basically almost back up to all-time highs. Oh, this is going to bug me. There we go. All right. Let's look at our zoomed out. Nothing too surprising here. If we clone this, they've done a good job, right? We just accumulated for a little bit, and then they sent it. Measured move would have been to close right at the top of this box. If you were in calls, 722 and 23 cents. Obviously, we're higher than that now. I know Shorty had puts. I don't know if he closed them on this sell-off here, but he had puts up here. Basically, everything that we kind of figured was going to happen has happened. We had talked about this, back here when we were consolidating in this yellow zone, that if they broke above, most likely they would hit the top of the box, which they did. We sold off, right, and then came back inside. This is very bullish, and then that's from there we gapped up back into this upper zone. And then we made new all-time highs, which we had talked about happening, right when they did all of this, with just looking extremely bullish, and they literally just made new all-time highs in just a few days. Then we had another little accumulation period, right, and they sent that higher. We're probably just going to keep, definitely anticipate some selling. I just don't think it's going to be tomorrow or even this week. I think we're going to keep grinding higher, specifically tomorrow. We don't want to go into tomorrow with, I'll talk about that in a second, Kara. We don't want to go into tomorrow, with a bias, right, that they're going to go higher. But we will talk about what to watch for as far as determining if that's the most likely scenario. So when you're looking at charts, there's a couple of important things as far as the day is concerned. So I just kind of eyeball it. You can use the TPO settings, or you can use TPO. And basically, the issue with this is generally, if I should back up, TPO is broken up into every 30-minute candle is a period. So the first 30-minute candle of the day is at the A period. Second 30-minute candle is the B, C, D, E, F, G, so on and so forth, right? If B and A, or it doesn't have to be B and A, I'm sorry. This could be the C candle that comes down like this. If they're close to each other, that's going to be considered like a poor low. And I'll explain that more in a second. Or like in this case here, L and M are close to each other. That's going to be considered a poor high. It doesn't have to be specifically L and M. Again, it could be any time period. Like B here, for instance, could come up into this kind of same range as L, and that would be considered a poor high still. We have two candles that are up in this, trading in this same kind of range, okay? So the best way I can explain this is, I mean, for one, you want to read Trader Dale's book on volume profile. So I don't know if this is, actually it does work here, so we'll literally use this example. Right here, as you see, like this B period is literally all by itself up here, right? E came up to here, but it's not anywhere near the top. So there's nothing else up here in this range on this day. In this specific instance, this is all-time highs, so there's nothing up here, period. But that's not relevant. I mean, that is relevant, but it's not necessarily important for what I'm talking about. This is what you would consider single prints, where this B period, again, it could be any period, but in this instance, it's B period, is up here all by itself, right? There's a wick and there's no other candles up in this range. And so what you would do is you put a line here on your chart, and you would mark this as single prints. And generally, not always, but generally, this would be the bottom of the single print zone. And I'll explain this even more in a second. I like to draw a box just to make this simple. This shows you the midpoint between the single print area. And I always like to mark the midpoint of single prints, because a lot of times that's where a bounce or a rejection will happen. So if these single prints were at the bottom, and we came down to there, you would expect a bounce. If the single prints are at the top and we come back there, you expect a rejection. And again, generally that rejection will happen between here and here, the mid and the top. Not always. There's another way that you can look at this. Let me hit replay really quick. If you go on like a 5-minute time frame, I like to use the body of the candles. So like here, as a place to close your trade. So we can mark this one. Okay. And if you want to be like on the safer side, you could close at the body of like this candle here. And basically what this is like if you're in calls or you're long, if you're a futures trader, as you come up to these single prints, this is where you would close your trade in this kind of zone here. And then this can play out way in the future. So if we turn off this replay, so that's not what I was trying to do, but if we hit replay here. So these single prints were created on Friday, May 1st, I think. Yeah. And then we come over to today. I'm actually going to turn off TPO just to clean everything up. So as we approach this area, this is kind of where I said, you know, the midpoint here to the candle, the body of the candles is where you want to kind of close your trade if you were in calls or if you're in long. And so if we watch what happens as they approach this, we come up, this is where they touch like that candy bottle candle bottle candy bottles, candle bottom, body, and the single print zone, right? This is where you would close your trade. And then from there, boom, right? They do end up bouncing and going higher. Basically, even with the single, or actually they broke above the single prints and tapped like 725. And then we got like the massive rejection at the end of the day, right? Yeah, so this happened. But if you closed here, should be happy. Oh, Gigi, thank you so much. That's crazy, but thank you. Really appreciate that. How are you? Who is Candy? That's my girlfriend. But so that's how you want to trade when you have, single prints at the top. Same thing if you have single prints at the bottom. I'll find an example for you guys and show you. And then we'll talk about poor highs and poor lows. But you always want to be aware of where your single prints are on your charts. You always want to be aware of where your poor highs and poor lows are. And then once they're cleaned up, so these single prints were cleaned up today, meaning that we went above the top of the single prints, then you would erase them off your chart. So, well, this would be an example, but it's not a good one because we don't have a retest. These are single prints here, right? And I think kind of actually recently that's been a thing. Wherever we have single prints at the bottom, they're not being retested. They're just running. So and then you find these on 30-minute time frame. But let's see if we can find like a single print at the bottom that's been retested. I'm not going to draw the whole thing out again, but we'll just look at it as an example on the bottom. This is single prints, but I don't think... Yeah, it was probably retested over here. So we'll just use the box. Again, so we're marking basically the bottom up to the next candle, which is this candle right here, right? This is our midpoint, right? And so we expect to see a bounce between the mid and the bottom, okay? So when we scroll to the right, here it is. I mean, they ended up dipping a little bit below and then bouncing, but if you got into this trade, you wouldn't have been stopped out, or you shouldn't have been. And then they absolutely ran it, right? So that's how single prints work. Single prints are a place where you expect reversals to happen. So if it's at the top, we expect a rejection. If they're at the bottom, you expect a bounce. And basically, the way that I describe it is if you have a strong enough level on your chart that one candle comes down and creates this wick and then just like absolutely rockets from there, this is a strong level, right? So most likely the next time you revisit that level, you're going to get a reaction similar to this, which is exactly what happened over here. And then if we come back to today, right? I mean, I already erased everything, but the same thing that we were looking at here, here, when price came to those single prints here, they rejected pretty hard initially and then bounced, right? So always be aware of single prints. And again, we find these on the 30-minute time frame, and it's where you just have price, or you have a candle all by itself, right? Where there's no other candles that day. Like if we look here on these single prints here, like this candle comes down into this range, but this is a different day. So we're literally looking just at individual days, where today we have the poor high and the poor low. And we'll talk about those really quickly. Like this here would be considered a poor low. And that's where you have like more than one candle that kind of comes to the same range. It doesn't have to be the same level, but the same range. So like this here would be considered poor lows. All of this through here is considered poor lows. Same thing on the top up here, like this candle and this candle are within the same range. So it's a poor high. And basically the distinction between, like a poor high, poor low and single prints is with single prints, that level was so strong when price came there, we got a really quick, immediate reaction, right? When you have poor highs and poor lows, we didn't get that strong reaction when price came there, which tells us the next time price comes there, they're probably going to break through and keep going, whether that be at the top or at the bottom, right? So in this case, we have a poor low and a poor high, which basically means, if we come up to here again, they're probably going to break through and keep going higher. If they come here, they're probably going to break below and keep going lower. A lot of times you'll have like poor lows at the bottom and single prints at the top. That's an indication that they probably want to go lower, right? We had a strong reaction at the top. They sent price down. And since the weakness is at the bottom, they're probably going to want to go lower. And then the inverse, right? The number of people that have explained this besides me is 0. We talk about the important stuff here. We really take trading to, or I don't know how to, like, what words to use, but I like to talk about what's important, the stuff that can't be manipulated by market makers, which is volume, whether that be volume at time, volume at price, or things like what we're talking about right now, poor highs, poor lows, single prints. So again, like if we have poor highs and we have single prints at the bottom, most likely they're going to want to push price higher and keep going, right? So something to keep in mind when you're trading, you want to make sure you always have those things marked, right? And right now, we're up above our poor high. Like they're already showing that they want strength to keep going higher, right? Which again is kind of what I figured. And we're going to talk about this more. Really quickly before I go into levels for tomorrow, let's just do a little bit more on the education side, right? If we look at this here, this is actually an anomaly. So normally when we have, actually, let me not do this. Let me go here first. So if we look at Monday's volume profile, right, we traded here. This was our value area for Monday. And normally, if you open above your value area the next day, most likely you're going to have a trend day to the upside, right? Which is exactly what happened today. It wasn't a very aggressive trend day. It was a slow, grindy day. They created like a D-shaped profile, which wouldn't be normally like considered a trend day, but ultimately this is a trend day to the upside, right? And that's exactly what you would expect to see when you gap up above your previous day value area. So I just wanted to cover it since it happened today. An example again, if we look at Friday, we opened below Friday's value area low, right? We came back up and retested the POC. And then from there, pretty much a trend day to the downside, right? So that's something that you always want to have in your mind when the day starts. Like, did we open above yesterday's value area? Did we open below yesterday's value area? If the answer is yes to either of those, most likely we're going to trend in that direction. Not always, but most likely. The next question is, did we open within yesterday's value area? And if so, those are the days where you're looking to sell the bottom. I mean, sell the top, buy the bottom, right? Those are the days where we just kind of chop sideways. So whenever we open, like for example, if we opened within this value area here, we're going to expect price to just kind of bounce back and forth between. You might get the occasional like spike, that stops people out and whatever. But you can pretty confidently long the bottoms and short the tops, right? Over and over and over again. So always keep in mind, where did we open in comparison with the previous day? And then you're always going to have anomalies, right? So if we look at Friday's profile, we gapped up and we opened above Thursday's profile, right? So normally we would have like a nice trend day up. They started off strong and then they basically closed where we opened, right? So this ended up being a typical day where we're just kind of chopping sideways, a D-shaped profile, which we wouldn't expect. But again, the market's not always going to do, the 100% like, oh, we opened above value, so now we're going to trend, right? Or we opened below, we're going to trend. We opened inside, we're going to chop sideways. But those are just good rules to have in the back of your mind every day when you go to trade. Like, where did we open in relation to yesterday? All right. So here's an example, right? This is our value area for Monday. And we opened inside Monday's value area and they just chopped sideways all day, right? So that's exactly what we would expect. So for Kara, hopefully you're still here. We talked about single prints and we talked about poor highs, poor lows. They do sometimes have different names. All means the same thing though. Regardless of what the name is, you trade it the same way. This is a book that you want to read. Volume Profile by Trader Dale, The Insider Guide to Trading. If we go to page, I think it's 46. I was close. 40. Strong high, strong low. What we talked about. He's going to talk about it a little bit more in depth. And then he shows examples, right? Strong low. So like what I was saying is if you're in a trade coming down, right, you would want to close at the body of these candles. So as price comes here, close there. It did come a little bit lower, but we got out, protected our money, and then it ran, right? So, and it basically bounced. It looks right about the midpoint of those single prints, right? And that's what we would expect. Here's an example of a strong high. With this, again, you want to close in this zone here. This would be, so he's calling it a weak high. They're also called poor highs. And that's just where you've got those, multiple wicks coming to the same level. I will say Trader Dale says something that I don't agree with here, and that's okay. But it is what it is. So this is an example of a strong high. He's saying to close way down here. Every time I look at this, I'm like, kind of fishy. Because actually, I take it back. I probably would be closing right about there as well. Right where the body of these candles are here is probably where I would be looking to close. So maybe it's not fishy. So this is where I don't agree with Trader Dale, and it is what it is. With trading, like sometimes things, like sometimes I'm losing my words, but basically, like I've seen so many times where you have a poor high, right? When we're talking about strong highs, we definitely know we want to close before we get up here because there's a good chance we don't make it up there, right? Whereas with weak highs or poor highs, Trader Dale says a common mistake is closing at this level. And that I don't agree with. Instead of closing early like I would if this was a strong high, I close at the weak high. Because a lot of times they'll just barely peak above enough to go higher than the weak high, and then they'll reject and go lower. I would backtest this for yourself and figure out what you're more comfortable doing. But for me, I do close my trades at weak highs, and I close before we get to a strong high or a strong low. Same thing, close at the weak high or at a weak low. You'll also see these referred to as completed auctions. So strong highs are also called completed auctions. I don't want to confuse people, but if you hear it referred to as something different, I want you to understand what it is that's being talked about. It's the same thing: completed auction, strong high, strong low, completed auction, right? Or single prints, right? So 3 different names for the same thing: single prints, poor or strong high, completed auction; single prints, strong low, completed auction, right? Poor high, weak high, poor low, weak low. Same thing. Okay. So read this book. And you can actually get it for free. He also has a really good section. I mean, read the whole book. It's a very short book, and it's just packed full of like great information. The thing is, when it comes to trading, people really overcomplicate it, and it doesn't need to be complicated. Right here on page 25, he starts talking about trading strategies. And these are the best trading strategies, at least in my opinion. Support becoming resistance. So if we see a level that price keeps bouncing off of, right, and then it gets broken with momentum, and what I'm looking for is like 3 5-minute candles at least below this level. And I wouldn't count this first candle, and I also wouldn't count the second candle. And the reason being, well, when they first broke this, this would be 1, right? And this would be 2. But here, the third candle touched the level again. This becomes 1 again. And then after 1, we get 2, 3. At this point, I'm looking for them to retest this level, and I'm entering short or grabbing puts. So this is called a support resistance flip or an SR flip. Anytime you see price bouncing off of a level and it gets broken with momentum, and we don't keep touching that level over and over, you count 3 5-minute candles, including the first candle. The first candle can touch it, but second and third, you don't want it to touch. If it does touch, you start counting over again. And then you look for a retest, and that would be your entry for puts or for short, right? And then from there, you just say, like, where's my single prints? Where's my, poor low? And that's where you would be looking to close, unless you have a level between there. Like, you might have another support resistance flip below, or you might have, like, a value area low or a value area high below this where you think is a good place to close your trade. Here's the same thing to the upside. Resistance, 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 break. Again, I would start counting at this candle. So this is 1, 2, 3. I got my 3 5-minute candles. Now I'm waiting for my retest, and then I would enter long or enter calls, right? Strategy 2, open drive. This is basically where we have sideways price action, a big move in either up or down. When you come back to this level, you would enter in the same direction, right? This is market open plus open drive, meaning you don't necessarily need that sideways price action. You're just looking for, from the open, if we made a big move down or a big move up and we happen to retest that same level, you would enter in the same direction, right? Low volatility, this is our sideways price action, big move, retest, enter. And this I love about Trader Dale. This is one of the other important things with trading. You're never going to have a 100% win rate. You're going to have losing trades. the only way you'll be successful as a trader is being okay taking losses. If you're not okay taking losses, you'll never succeed in this game. So you can see in this example by Trader Dale, we come down, tap, get that bounce, but then it immediately reverses and starts going back. And it looks like this probably didn't work out. I don't know because he doesn't show us. But I love that he's showing an example where it probably didn't work out. And there's nothing wrong with that. The best educational traders that I know on YouTube talk about losses all the time. Because again, you will never be successful if you don't learn how to take a loss. It just won't happen. Strategy 3 that he talks about is AB equals CD. I don't personally trade this, so I'm not going to talk about it. But some people might like this. Read what he has to say. Trade off of it if you want to. You're just measuring from A to B, which gives you C. Or C would be below the 50% retracement on fibs. A lot of times they'll bounce right at the 50% retracement. And then that gives you D, which is basically slightly above B, I think. Yeah. Anyway, like I said, I don't use it, so not really sure. Oh, I guess D is way up here. And he's saying to enter short from there. So. Yeah. Oh, I was going to grab the link for it. The other thing, like Kara and other people, if you're paying attention, whenever you trade, you want to do a minimum of 1 risk, 2 rewards. So anytime you risk $1, you need to make 2 at a minimum. If you can do 1 to 3, that's better. 1 to 4 is better than that. 1 to 5 is even better than that. Because again, you are going to take losses. But the way that we become profitable as traders is by doubling our losses every single trade that we take, right? So if I can make $2 and risk 1, and I'm only 50% accurate as a trader, I'm still making a fortune. So that book, you can actually get completely for free. I'll post this link for you guys. This is only for people in the US. Sorry. But you just come here, you select volume profile, the insider guide to trading, click next, put in your address, whatever, and pay for shipping, I think, and he mails it to you completely free. I've ordered a book doing this, and I got the book. Trader Dale's actually like a really cool dude. I've actually spoke with him like on a Zoom call, I think. Really nice guy, very knowledgeable, great trader. And then I know people that have gone and ordered one book and then gone back and ordered the next one and ordered the one after that and the one after that. And they got all 4 books for free. So you can also get them on Amazon for like $10. Definitely get it and read it. Again, it's a short book and it's full of amazing information. If you happen to want, like me personally, I like to read physical copies of books. I don't like to read on a computer screen. But however, like for reference reasons, like having this on my computer is great. But if you don't mind reading on a computer screen or whatever, reading on a tablet, you can actually download the books for free as well, right? You just have to put in your email address. He will send you like information. Nothing crazy though. A lot of times he'll send trades that he's looking at. So, and you can always unsubscribe if you don't want his emails, but he sends a bunch of good information actually. And you can download VWAP, volume profile, and order flow. This is very advanced, so definitely read this last. Okay. So, good stuff. Let's go ahead and look at... Sorry, I just lost my train of thought. Fear and Greed Index. I would guess that we're in greed here somewhere. Yeah. This is where you don't buy shares. This is where, if anything, you start considering selling stocks, because you're probably going to have a little bit of a pullback. And again, it depends on, like what's important to you as a trader. Like right now I have Intel. I won't be selling those shares for a long time. My average was like $20 and some change, and it's up at 110 the last time I looked. Probably higher right now because I know the market's ripping. SPY is running right now. And I'm not surprised. Like I said, I was kind of expecting... I was expecting them to run it tomorrow. It looks like they're already doing it now. For tomorrow, let's look at our calendar. Tomorrow is Wednesday. There's not a whole lot going on. 30 minutes after the market opens, we have IVPMI. But this stuff isn't going to really affect the market very much. Really nothing going on Thursday. Quite a bit going on Thursday pre-market, right? I mean Friday pre-market. All right. Yeah, Intel's going to $400, so I'll be holding it for quite a while. With that said, I did sell some of my NBIZ shares today. And when I say, or no, I sold them yesterday. I apologize. I don't remember exactly what price, but it was like right in here somewhere that I sold. And I did it for my own reasons. I had 150 shares at a very low average, like 27. And it's far exceeded my expectations. The only issue is I think it's going to keep going. But with 150 shares at this price, it was getting to a point where too much of my portfolio was invested in one stock. And it wasn't like, that kind of doesn't make sense, because when I bought, like it was a smaller position because I bought at $27 and I bought 150 shares. But now that it's up at $175, right around there is where I sold, and 150 shares, that's a pretty big chunk of my portfolio. And basically just more money than I want to have in a single stock. So I just sold 50 shares where I'm content. Like if price decides to keep running, I'm not going to feel like, oh, I lost out, right? Like, oh, I shouldn't have sold those 50 shares. I know that is 100% a possibility with this, because the good news just keeps rolling in on NBIZ. But if it just keeps running, great. I secured some profits. Like basically, I just took back like my initial investment on the position, and I left most of my profits in the stock. And that way, if it went to zero tomorrow, I didn't lose anything. Basically, my plan is if they come back and revisit like this 138-ish area, I'll basically take the money that I sold up here and reinvest all of it here and just end up with more shares than what I originally had, if that makes sense. Sometimes I sell calls. So that's my plan. The thing is I can't sell, like if I sell a call, then I had 150 shares, I would be risking 100 shares that I could be that I could have to close if somebody exercised the call, right? If it went against me. And I just wanted to get rid of 50 shares. Again, if they come back to like this 138 zone, I will end up just reinvesting all of the money that I took out of the position here. I'll reinvest all of it down here. And then when we come back to here, I'll pull out the same amount and I'll just end up with more shares, if that makes sense. And again, if they keep running, no big deal. Don't really care. I wanted to protect my my initial investment and protect my funds, and also just not have such a large amount in one stock. So that's why I closed. I also bought Nike today. I announced that in Keenan's. I've been buying Nike. I think my average is right around $44. I'm not sure exactly, but it's close to that. I bought more right here at like 43.06. If you look, I think right here, the Nike CEO bought quite a few shares, and also I think it was the Apple CFO. It could have been the CEO. I don't remember. Also bought a bunch of shares of Nike down at this level. So I'm a buyer here. Back to SPY. Again, based on what I said, pretty sure we're going to run tomorrow. No surprises. We don't really have levels up here, right? We kind of do now. We're here. They're still going. So what you're really looking for tomorrow is probably a trend day to the upside. But we don't have levels higher unless you start using fibs. But what I would really hope for is a pullback to here to grab calls, and then you close, depending on what you have at the top. If you have a poor high at the top, I would close equal to the poor high. If you have single prints, then close at the body candles or the body of the candles. But so we're looking for a bounce for a play, right? Again, pay attention to where we open. If they give us this, we want to hop in calls. This is probably the most likely scenario for tomorrow. I would actually love to trade live tomorrow. Like I said, that's going to be happening a lot more often soon. But tomorrow, my son, me, and my son's music teacher are going to the shooting range. It's been way too long. I like to keep my skills sharp. More importantly, I like to keep my son's skills sharp. So we haven't been to the shooting range in a good, probably like 3 months. So, and that's a lot longer than I like to wait between range time. So if you take calls here, I'm trying to figure out, you could probably stop out right around 7.24 and like 45 cents. If they come down in here, then we're probably going lower, right? I think calls are the way tomorrow, but just in case, if we break back below previous day value area high, watch for that 80% to the downside, right? Okay. All right. I want to show something really quickly. Just if I can find a good example. Sometimes easier said than done. Unfortunately, they're just not giving retests at all. Here's an example. So this is for, hey, what's up, Erez? Yeah, Tim Cook. Thanks, Bert. This is for Kara. Hopefully you're still here. If we look at this level here, right? Actually, I mean, we can even go further back, like to here. This is support, right? Support, 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 broken with momentum, right? You come back here, you enter puts. Kind of would expect them to go lower, but they didn't. But that's exactly what we're talking about with those SR flips, right? So just something to watch for. Okay. The let me give away all of the secrets. This is a trade I love to take that you won't really see people talk about because I don't know why. To me, this is such an obvious short, obvious puts, right? This example here, we have a wick at the top, wick at the top, wick at the top, whip at the top, whip at the top. And this is a poor high, right? Where we've basically wicked up to this same level over and over and over again. By the second or third candle, you have to be thinking, ooh, they're going to sell off from here, right? And then at the bottom, there's not a lot of wicks compared to the top. There's more wicks at the top and longer wicks. And we've got a couple of small wicks on the bottom, right? And so this is all just selling happening and then whoosh, right? These are trades I love to take. Sometimes it's hard to differentiate what they're going to do. Like if we look at this example here, right? Like we have a long wick, but we also have pretty long wicks above, right? So it's kind of hard to determine if on this example they're going to send it or if they're going to sell off, right? Whereas if we look at this here, this isn't quite as pretty as this one, but we have long wick at the top, long wick, wick, long wick, 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 right? And we have like one long wick down at the bottom. And other than that one, most of the wicks are at the top. Pretty easy for me to say puts, right? And then from there, you know, you just determine, do I have a poor low or like or single prints at the bottom? And that's where you figure out where to close your trade, right? We have single prints right here. Where's my box? So you look for that midpoint or even the top of the box. You're basically wanting to close your trade in this zone right there. Makes sense? So what I'm talking about here, I call this the sneaky trade. It might have a better name, but I call it the sneaky trade. And the best part is you see them pretty often. I don't see any great examples today, but you'll find good examples like pretty often. Like here, much longer wicks down here. We've got some short wicks at the top, but looks like they want to go higher. Could probably argue that this is one here. I probably wouldn't take it because of this long wick there. But yeah, just watch for those. Like this one here is nice. Definitely down here, this is nice. Anyway, always watch for the sneaky trades. I love them. They are fun. Here's one. This one's kind of questionable with the longer wicks here at the top, but I think again we have more long wicks at the bottom than we do at the top, right? Definitely this. Definitely this. Right? Yeah. Anyway. Hopefully what we've talked about helps people. Hopefully that, like opens up some ideas for you guys. And then I'll share something with you. And hopefully this helps a lot. If I'm confused, right? Let's say just ask. It's all at our fingertips, right? Before you would have to read a bunch of books. I recommend reading a bunch of books, but as you're learning, right? Just what you really want to do as a trader is you want to always be in question. Like if we gap above yesterday's value area, what is that saying about the market, right? It's always telling us a story, and we have to figure out what the story is. And so if you don't know what it means, if you gap above yesterday's value area, just hit up ChatGPT. Read all the books though, so that you get all of the knowledge, like put it all together. But ask the questions, right? Like you want to be trying to figure out on the daily, what is the story? Like, what is the market telling me? Are we, and this is the big thing, right? The market's always trying to find value. And what value is what people are willing to pay for it. There's some really frustrating terms that retail traders use that just bug the hell out of me. Oversold. I forget like all the terms, but like oversold or the term for when it sells off too much, stuff like that. Like that shit drives me insane because there's no such thing as oversold or overbought, right? Like the best way to put this into perspective, and let's use Nike's because I'm a shareholder. I'm a big shareholder. How many shares of Nike do I have? Or like Snapchat. Nike, I have 400 shares. Snap, I have 800 shares. Anyway, we'll use Nike as an example. If I have a pair of Nikes, let's say I bought them for $100, right? But right now they're selling for $5. And I have 10 people wanting to buy this one pair of Nikes from me for $500. That means that price is accepted up here at $500 a pair of Nikes, not down here at $100 where I bought it, right? So what the question is what is considered fair value right now today? Not is it overbought, oversold, whatever. Those are bullshit terms because it's not a real thing. It's what people are willing to pay. So if people are willing to pay $500 for a pair of Nikes, that's the cost. That's what they're selling for, right? So you always want to be asking yourself, what is the story that the market's trying to tell me? Are we accepting value? Accepting value would mean if this is value, right, today, my value area high to my value area low, did we open back inside this range? If so, this is probably what is going to be accepted for the day, right? Buy the bottom, sell the top. Buy the bottom, sell the top. You're going to have little spikes above that and below that. You just have to make sure your stop loss is, within a reasonable range to where you're not going to get your cheeks clapped if it goes outside of value a little bit. But what the real thing that you're asking is the market accepting value, right? And so when I was talking earlier about Trader Dale's book, right, where he's saying where you see like that support bounce, break, right? The reason that we don't get in the second we break below is we don't know if price is accepted outside of value, right? So like if we look at a typical day, where we've opened inside value, right? So like this is our typical day. We talked about this already. This might not be the best example, but it's okay. Actually, we'll use... Yeah. Actually, it's fine. I mean, you could have made a point, right? But if we turn off session volume profile just so that this is a little bit cleaner, right? If we look at this day here, right? We opened inside the previous day's value, right? Meaning price is accepted in here. If the second we broke below the value area low, we got in short or got in puts, we would have got our cheeks clapped, right? Because it just peaked below it and then came back inside. So as of right now, price is not accepted below our value area, right? This is the range where price is being accepted. Or sorry, I'm looking at the wrong thing. Why am I looking at the wrong thing? Let me do this again using the right information. So this is our value area. Sorry, I kind of worked this, but this is our value area from top to bottom here, right? So if we got in puts the second they lost value area, like, yeah, you could have made a little bit money to the downside, but they immediately came back in, right? And then we got the first candle, second, third, they gave us the retest, and then they ran all the way to the top, right? So this is actually super bullish. When we leave the value area and come back inside and retest the bottom, right? And again, all you have to do is ask questions. So if we go back to GPT and we say, if we open within yesterday's, I just messed it up. Oh my gosh. Um, if I have spelling errors, I'm sorry. I'm not good at typing, and I'm also dyslexic. So right here, that's your answer. Boom. Lower prices were not accepted. Rotation across the value area, highest probability. Once back inside value, the market often rotates from value area low to value area high. Oh shit, look at that. You just have to ask the questions. You just have to say, what is the story the market's trying to tell me? Always think about, are we inside value? Are we outside of value? Is value being accepted? So again, here, we talked about, like, so this is our value area low. This is a support level. When we break it here, right, and they didn't quite give us the 3 candles below, but this is looking like value is being accepted below. They retested it and sold off, right? Or even better, right here, we definitely had 3 5-minute candles below. We retested. We got an even bigger move to the downside. Value is now being accepted down here, right? If we break above and get 3 5-minute candles, that generally tells us that value is now being accepted above, and we're probably going to go higher, right? So always in trading, think about, are we in value? Is price being accepted, or are we out of value? If we do, the inverse at the top here and peak above and fall back in, we're probably going to go to the far side. You don't even have to wait for a retest on this. The second you peak above and come back in, you're probably going to have a pretty good sell-off. Same thing here. When we come below and come back inside, we're probably going to have a pretty good buying move to the upside, right? Value was not accepted here. If it comes up here and peaks out and comes back in, value was not accepted here. That means we're happy in this range. If we lose with momentum and have 3 or more 5-minute candles below, retest, value is accepted down here, right? And if we want to get really serious about this, if we hit the replay feature, right, we look for poor highs, poor lows, single prints, and so on 30-minute candles, right? So if we're looking at this, this is a poor low, right? So they're probably going to go lower. I mean, we already know what happens, but we're not making shit up, right? This is a poor low. Price is probably going to break through this. Me as a trader, if I'm short, right, I'm going to take my trade from here to here, and I'm going to be happy with my money, and I'm going to run. And what I do is you use the short position tool, and you measure whatever it is. You're going to figure out where you want to put your stop loss. And as long as you're making at least $2 for every dollar you risk, you're good to take the trade, right? Me as a trader, when I look at this, I'm probably going to be putting my stop loss in this range here. And I generally would want to be a little bit above it, just in case they try to do like a liquidity sweep. So something like this, and I'm still able to get at least 2 to 1 on my trade. And then the reason that I said liquidity sweep is really, like, I'm looking at the body of these candles here as where if they came to there, I probably would want to be stopped out of the trade, but I want a little buffer, right? In case market makers are like, oh, most people are going to close their trade here, so let's bring it just a little bit past that and then go, right? So this is how I would set up my trade, something like this. I don't know if this would work out. It doesn't matter if it works out because, like we already talked about, you're never going to be right 100% of the time. But if we start playing this forward, we can see what happens. I prefer 5 minutes. So here's our entry, right? We're in the trade now. And yeah, they wouldn't have stopped us out and they would have hit our profit target. And again, I think where I was targeting was like right, no, it wasn't there. Actually, now I'm curious. I want to go back to 30 minutes. I was saying they probably come here, right? And then like that's your liquidity right there, right? So you want your stop to be a little bit above that. This is not a mistake. They literally came right to there and then they sold off. Right? So, again, always ask, what is the story the market's telling you? Are we accepted in value? Are we outside value? Are we creating value higher? Are we creating value lower? And the way that you know if they're creating value higher or lower is if you spend 15 minutes outside, above or below. Right? Always look at where did we open? Inside value, above, below. Do we come immediately back inside value? Like if we gap above and immediately come back inside, that's pretty bearish. So just always never use 1 minute. I'll answer that question for you very thoroughly. There isn't a single person is the key word, that can process 1 minute candles fast enough to trade off of them. Algorithms can use 1 minute candles. We can't. Too much information, too fast. Just way too much going on. And all it's going to do is just add confusion. Everything you need can be found on 5 minutes and above. And again, if we go to like, sorry. What happened? So if I'm using my previous day value area low, right, as my area to enter puts, and I'm on a 5 minute chart, right? Let me do this really quick. Replay, bro. So the way my mind works, 1, 2, 3. Actually, this was the short. I was wrong. So let me go backwards. The minute this candle happens, or even, I mean, like this candle, it doesn't matter, any candle that goes below my previous day value area low, I'm immediately thinking, if we come back up and retest the previous day value area low off of, after 3 5-minute candles below, I'm going to get puts there. So then right away, I have 15 minutes to plan my entry, my exit, whatever, blah, 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 blah. Make sure I'm making at least $2 for every dollar risked. And I have 15 minutes to plan my trade. And it's a lot easier to count 3 5-minute candles than it is to count 15 1-minute candles. Right? So as soon as that happens again, plan out my trade. have 15 minutes. Here's my retest. I would enter short. And then, I mean, we've already done this, but there's your profit, right? So that's how I trade. Plan your trades. You have plenty of time to plan. If you're just randomly clicking buy and sell without making a plan, you're doing it wrong. You have 15 minutes to determine whether or not value is being accepted, whether that be within yesterday's value area or below yesterday's value area or above yesterday's value area. You might even have longer. You know, like if we go to the next trade that worked, I don't even know how long. That's our retest, right? Oh, so this was from here to here. You had an hour and 35 minutes to plan out your trade to get puts there. Right? So, and then also notice, I didn't even think about this as it was happening, but we bounced right off of the previous week value area low. That was your next support level. Okay. Hopefully this is helpful. Anyway, plan is to be trading live a lot more. And anybody that knows me, when I trade live, I do like education. I'll do like question and answers at the end. Plan is also to get out a lot more education. But again, wherever you are in your trading journey, I probably have a book for you. There's tons of books to read, but you can always just come to ChatGPT and ask questions. Like if you hear somebody use a term and you don't know what it is, like you could say, if you don't know what single prints are, and then it'll explain it to you. Okay. So, yeah. So, this is kind of a do as I say, not as I do conversation. When you're learning how to trade, you need to slow down, right? And plan everything out. And if you watch me trade live, like sometimes I'll just be like, I'm long here, I'm short here. And it's because I'll see like a signal that happens within seconds on order flow that you can't plan for. But that's more advanced strategies. You'll also see me say like, oh, we're probably going to get a bounce at blah, 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 blah. And it might take 30 minutes for us to get there. And when price comes there, I enter my trade, or I already have an order sitting there. And yes, in that instance, the trade is planned, right? But again, using more advanced techniques, you might see me when I'm trading live be like short, long, did it like, you know, very quickly. Yes, build the foundation. So when you're learning, and we've talked about this so much, like you want to take one trade a day. You want to plan out your trade. You want to make sure you have an A++ setup, right? After you've done that for 6 months or even 3 months, then you can start implementing order flow, right? And entering those trades on more of a whim where you're getting like a really strong buy signal or a really strong sell signal from order flow. And you don't have time to, plan out a trade. And that's a different topic, right? We're talking about building the foundation as a beginner, and becoming, like a disciplined, profitable trader, and then moving on to more advanced concepts, Okay. Yep, exactly. Quick on the draw is after you have more experience under your belt. And I talk about that all the time, right? I'll say like trade for 3 months just off of volume profile and TPO before you start implementing order flow. And that's for everybody. Okay. Whoever advised you to stay on the 1 minute, don't listen to them anymore. Simple. And I think also, Kara, I'm never trying to talk bad about other traders. Um, you have to make a decision for yourself, like if whoever it is worth listening to. And the way that I say to always quantify whether somebody is worth learning from is if you can watch them trade live and if they can consistently, like they're going to have losses. That's inevitable. But if they're consistently winning like 60, 70% win rate or even 50% win rate, they're worth learning from. But if they never trade live and they're trying to teach you and make money off of you, it's because they can't, right? And that's not somebody you want to learn from. So I have no idea who told you 1 minute, but that's terrible advice. And they might be a good trader. I don't know. They might be profitable. They might do very well. They might trade live, but still saying to trade on 1 minute is terrible advice. At least from my perspective, I was taught by Shorty. He's a market maker, and he'll flat out, like if he was here right now, he would tell you 1 minute, like, who do you think you are? Like he would probably laugh at us. Like he would literally tell you, none of us in this chat room are quick enough to react on a 1 minute chart. So, just a big no from me. And I think it's also like, that's so ingrained in my head. When Shorty taught me, it was always trade off of 5 minutes. Every once in a while he would drop down to a 3 minute chart, but that's very, very rare. Pretty much always 5 minute as a minimum. And he would literally just like smack me upside the head if I told him I was trading on a 1 minute chart. So things like that are like kind of dear to me. I don't know how to like put it into words, but like, like there's some things that your parents, your grandparents taught you when you were little and it just sticks with you forever. And like if that scenario arises where they're like, oh, don't do that, like it still pops up in your head, like 30 years later. Kind of the same thing for me with Shorty. Like when somebody talks about trading on the 1 minute chart, I just want to pop. Like, no, absolutely not. And again, it doesn't necessarily mean they're a bad trader. They just didn't have the teacher that I did. Errors, you missed nothing. But okay. Wow. Okay, Kara. When I was typing in Chat GPT, I mentioned that I'm dyslexic. Um, you don't have an issue. I mean, sure, you can say you have a learning disability if that makes you happy. I don't ever you'll never hear me complain like, oh, I can't read. Actually, like I give people so much crap because like I have so many people that want to be students, right? And I'm like, oh, read this book. Oh, I can't read, blah, 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 blah. I'm dyslexic. I'm like, no, you can read. You just don't want to, right? Like you might have to work a little bit harder than somebody else that doesn't have a learning disability, but you're perfectly capable. Um, the distinction is whether or not you're willing to put in the work, right? If this is important to you, if trading is important to you, you'll put in the work and you'll do what you have to do. It might be harder for you than other people, but you can still do it. Reading is really hard for me. Like I'll have to read the same sentence like 10 times sometimes to comprehend what I'm reading because of my dyslexia, but you'll never hear me in here complaining about it. The only time I really talk about it is when other people try to tell me like, oh, I can't do that. And I'm like, bullshit. If I can do it, you can do it. I don't ever make excuses. I just work really hard and do what I have to do to make it work. And I don't even mind. Like, that's just who I am, right? Like, God made me the way I am. I'm dyslexic. It actually opened up like a lot of really cool opportunities for me, which is weird. But it is what it is. Like, okay, great. Like, I'm not going to be correcting other people's like spelling because I can barely spell myself because I transpose letters, like whatever. But I'm really good at science. I'm very intelligent. I'm good at a lot of other things. It doesn't matter, but I don't use it as an excuse, right? I'm just like, okay, I'm not going to be like a English major. I'll do something else that I am good at. But again, reading might be a little bit difficult for me, but I just do what I have to do to make it work, right? Like, I absolutely despise reading. But when I decided like, hey, I want to be a profitable trader, trust me, I hit those books and I hit them hard. And some pages I probably read like 10 times because I kept, being dyslexic, but whatever. You do what you got to do to make it work. But yeah, not your issue. And I'll just throw it out there, Kara, and this is for everybody else too. If you ever have questions, just reach out. Like, my DMs are open. More than happy to answer questions. Stay away from toxic people. Like, whoever was talking to you, I don't know who it is. I don't want to know because I don't want to have a bad opinion of that person. But that sounds really toxic, and I would avoid them. And they don't sound like they're worth learning from anyway. Oh yeah, and Rudy just mentioned something. So like, if you have like a poor high, poor low, or single prints, top, bottom, whatever, you break it, there's a good chance that's going to turn into a support level. And then the same thing at the bottom, you break it, good chance it becomes resistance, right? These become like pretty strong support resistance flip levels. Yeah. Alrighty. I think this has been an hour and a half long stream so far. Welcome back, stream, after me taking a week off. Sorry, everybody. But yeah, we're going to be diving in deeper, more education, more live streams as far as live trading, stuff like that. We're going to be going in hard. Okay. Trying to think if there's anything else I need to tell you guys. Let me go post screenshots really quick, and then if anybody has any questions, now would be the time. Don't be afraid to ask ChatGPT your questions as well. Okay. But always just slow down and ask, what is the story the market's trying to tell me? Are we inside of value? Are we outside of value? Is value being accepted? Oh, my neck needs to crack really badly, but whatever. Alrighty. Man, the baby's been sick and she is fussy and grumpy. Not fun. However, she is mosh pit baby, so I'm going to show you guys that now because it's just too good not to share. And then also I can have my video demonetized, which I don't really care about. So, for people that don't know, mosh pits always go counterclockwise. I don't know if the baby learned this from like watching or what, but she is insane. So this is mosh pit baby at my son's band practice. I don't think any of you are ready for this. Oh. very proud of Mosh Pit Baby. I really just don't know how she knows how to do that. And since it's been a while since I've seen you guys, this was sick. My son had backstage passes to see the Briggs. This is Joey, the lead singer, drummer, one of the guitarists, bassist, and the other guitarist. And this guy, I don't know if anybody knows, but like Voodoo Glow Skulls, he was the lead singer. He's the lead singer for Manic Hispanic. He's in Death by Stereo. He's in a ton of bands. But it was kind of crazy. Like, we were in the Briggs's green room, and my son was like, "Hey guys, can I get a picture with you really quick?" And like, they were like, "Oh yeah, yeah." And everybody started crowding in, and he literally walked in the door and like squeezed in the picture right at the end. Anyway, backstage with them, my son's band covers like their main song, which is called "This Is LA," and this happened. Oh wait, my son's name's Henrik, so you're gonna hear that.
Where's Henrik? Henrik's gonna help me sing this song. This kid's their fucking prodigy. This kid right here, he's gonna sing along with us. Where's Henrik? Alright, this song is called "This Is LA." Thank you very much for the breaks.
I like this part coming up. I'm just gonna let this whole thing play because the end is hilarious too. One of the things I noticed too is like the guitarist and the bassist like kept staring at my son and smiling. I don't know if you guys caught that, but yeah, it's cool. So I kind of screwed up with my camera work here, but I wasn't expecting what happened. So, to be fair. My son jumps off the stage, fist bumps a couple of people, and then they pick him up and start crowd surfing. He's right there. And I tried to zoom in and I missed him. But there he goes. Good times. All right. If you hung out for that, thank you. I should say, if you want to follow BJJ Henny, me, I am... Whoa. Confusion. With a K and a Z. That's me right there. If you do follow us, like, I don't know, send a message and say who you are, and we'll follow you back. All right? Thank you, everybody, for hanging out. Hopefully today was informative and helpful. Hopefully some people learned some stuff, or hopefully it was a good refresher for people that already knew the information. And like I said, I would like to trade live tomorrow, but I can't because I'm going shooting in the morning. Ditiosa, I hope that's how you say your name. Yeah, so it'll be in different places. You just retracted your message. Once a week, I'll be trading on Keenan's Discord exclusively. And then the rest will be shorties and the Learning Discord. And I might trade more than once a week on Keenan's, but definitely once a week. Okay. Alrighty. Kara, anybody else, my DMs are open, or just hit up ChatGPT. But if you guys have questions, I always try to make myself available and answer questions, and I always do a Q&A session after a live stream, so I try to answer everybody's questions then. Yeah. With that said, much love, much respect to everybody. Peace out. Bye.